All right, guys. So what is this agreement in the CTP methodology and why it's so important? As we discussed in the previous section, every CTP trade starts by spotting equivalent lines on two correlated assets. In this example, these trigger point resistance levels were equivalent for shorting ES and NQ. On the contrary, this example shows you equivalent lines where the first line is resistance while the second line is support. Market below resistance and market above means this level is support. These lines are still equivalent, but in this setup, they disagree. The two correlated assets disagree. Disagreement is identified when equivalent lines act the opposite on two correlated assets. So the first one is support, but the second one is resistance. And the result, one of them will break its level, leading to a losing trade. In many cases, we don't know which one of them will break, and that's why we don't trade on disagreement. Guys, disagreement, no trades. The result of disagreement is that one of them will break. In this case, you can see NQ broke. NQ followed ES. In many cases, it can be identified by a breakout candle generated by the follower. ES is the leader here, NQ is the follower, NQ broke its support level, and a beautiful breakout candle was created by NQ. The sellers were pushing to the downside on ES of resistance, and at the same time, a breakout candle was created by NQ. Guys, reading the price action is about identifying and anticipating these breakout candles when the sellers or the buyers are pushing. So in this case, NQ broke, NQ followed ES, and a breakout candle was observed when the sellers were pushing here on ES to the downside of support level. And if we went long here on NQ, we would stop out almost immediately. But guys, stopping out is not the only result of trading on this agreement. Trading on this agreement can result in stopping out, as we've seen here, if we bought NQ of support here. Or even worse than that, one of them can go up and down and up and down and up and down, crossing the level so many times. And this is when accounts get blown. Guys, trading NQ without looking at ES is like trading with one eye. Because let's say we trade NQ, which is the follower here on the CTP setup. So you'd go short here, right? Since it's a resistance for NQ, but then it broke. Resistance turns into support, so you go long here, then it broke again, so you short again, and again, and again, accounts get blown because the level is being crossed so many times. I have a question for you guys. Why does this behavior happen? Why is the follower's level being crossed many times on this agreement?